Hello and welcome back to the channel. Please note that all this information is for educational purposes only, and you should always do your own diligence on your investments. This is not investment advice, and if you are copy trading, you are an absolute moron and deserve to lose all your money. And with that out of the way, today's stock is an organization called Tyson Foods. Who are they? They are one of the largest meat companies in the United States. So it's precisely, they operate a fully vertically integrated model where they are involved in every stage of the chicken production process. So they have grandparent, breeder flocks raised in maturity, then those eggs are hatched into pullets sent to breeder houses, and then Tyson supplies the birds feed and technical advice to farmers that actually raise that chicken. Then they take the chicken and they process it on their plants. And what has been happening with these plants? Well, the sector overall had a very tough period over the last couple of years. This is really more of a turnaround story. So essentially, we've had avian flu that has affected dramatically the supply of the commodity, and also other forces in the market, like the war in Ukraine that increased the prices of grain, increase of wages, and other market dynamics that turn the the process into spread compression. So in 2022 onwards, and we can see it here, we had 5 quarters, consecutive quarters of negative EPS. Now, in the last one, reported on the 13th of November, they actually beat by a significant amount, 47%. And you can see that since then, the stock has been rising quite a bit. So we have come down from fairly high levels. Uh, so just below 100, and the stock is currently sitting just over 55. Now, let's think about this sector for a second. This is a stock with a beta of 0.81, uh, even though it's a business model that is fairly cyclical. Reason being, we have seen how the deterioration of market economy, the impact on inflation, the consumer is affecting their EPS levels. So you can see that here, right? They were having pretty good time over 2020, 2021, but then things dramatically changed over 2022. And so why do we think that the price is turning around? Because here we go here. Uh, we got over the course of a year, fundamentals are starting to improve a little bit. Company expects EPS growth in 2024 and significant EPS growth in 2025. And we can see that the multiple has gone. So typically since around, let's go back a little bit more in time. Typically since around 8 to 10 times earnings. And we've gone from that to almost 30, where we're currently sitting at these levels. So a few things. We are at the moment, uh, we have bounced back from a major support level, which is $45. And we also are right now around the resistance level of 55. So That's one thing. And there is some optimism out there about the fundamentals of the industry turning around. So these guys have a number of plants coming online that are starting production at the end of 2023 and also this year in 2024. The fundamentals of the sector are also getting better. So we have seen the prices of grain coming down. That helps. And also some issues with supply chain, like for example, export bans of chicken in Malaysia due to high prices that were caused by the Ukraine war. Those are not taking place anymore. So the market, again, they're paying 3 times multiple that they would normally pay for this company. The market seems to think that most of these issues are turning around, and management expects that this is the case. Although they have been quite pragmatic, their communication has been that they are trying to control what is controllable, what is in their hands. So among some of the improvements that they've done, they have brought a lot of efficiencies into the supply chain. They have automated a lot of their processes, and they have also introduced data into these processes in order to make that decision making process a lot more efficient. So that's the way that they expect to bring up this EPS, right? Because if we go to previous years, and let's see this on a yearly basis. So we're sitting down here at the end of 2022. EPS is 8.73, and 2023 was 1.34. So as you can see, massive drop. Expectations for this year is that we get to 192, but even though that is a significant increase, the real stuff comes in 2025, where their expectations is over $3.34. So essentially what they're saying is, yeah, we are going to almost triple EPS between end of 2023 and 2025. So guess what? The market is paying 3 times multiple. So the analysts have downgraded the stock since November, and the top ones have a price target of between 45 and $50, right? That's pretty much where we are. So we are in a situation here where we could have a stock that could double or even triple over the next 24 months. But the analyst community does not recognize that yet. Well, what can happen is that when they report EPS, when they report a quarter on the 5th of February, if that result is positive, there could be a number of analysts jumping on the bandwagon and start to upgrade the stock. Because at the moment, it already is higher than most of the price target that they have allocated for it. So that is a potential catalyst to see the stock moving up quite quickly. The valuation, however, is quite high versus peers. So most peers are trading in the mid to low teens, sometimes even single digit. So that's potentially one of the risks here, that this could be already priced in. Another risk is that the management operating plan that has been rolled out by the company takes a little bit longer than expected. And there are also some uh, issues that, whilst not full major problematic could escalate. So we have a child labor practice investigation going on. Not alarming for the stock price in the near term, but it could uh, unveil further issues down the line. The Ukraine war could also re-escalate and impact the grain supply chain. That's also a possibility. And last but not least, there has been a number of outbreaks of avian flu around not only the United States but also the world. So I'm gonna put here a map. I think you guys can see that. So this is a map as of today, the 9th of January 2024, where a number of outbreaks have been detected throughout the United States. So what you can see is that we have the north of the United States, obviously the west, south, and the Midwest. Now, considering how this has been going for quite some time, avian flu is an issue that has been going on since 2021. I think it's not unreasonable to assume that there could be other cases coming into the public domain very, very soon, probably in the East Coast. As a matter of fact, there have been issues of this nature in other parts of the world. So all over Europe, Japan. There was even a case of a polar bear in Alaska. So that's again um, another case of avian flu, albeit not in poultry, that has been detected. So those are definitely factors to bear in mind. So where does this all leave us? Well, I think this is a stock that could perform quite well. Like I said, it could double or triple, but like I said, that is likely going to happen sometime over the next 24 months. It could start a little bit sooner than that if the earnings on 5th of February are positive, but I would wait for now and see how those results come out, then reconsider this. The reason being is, first of all, we have plenty of upside. We're sitting here and we could see the stock going all the way to here. So that's one reason. So once we want to see this kind of positive momentum that we're seeing here, right? The stock bottoming in late October at 44, up 20% at 55 levels. It is possible that at these levels, that performance has been priced in already. Do we see the stock growing? Yes. Do we see the stock growing, continuing this momentum in the near term? It's more unlikely than not, really, with the kind of risks that we have mentioned before. So for now, I'm gonna keep this stock on my watch list. If for whatever reason it retreats to more interesting levels, perhaps in the mid 40s, that would be a better entry point. So for now, I'll monitor it. This is an idea that I think could play out throughout the year, but definitely not something I want to enter for the time being. Having said that, I think there will be plenty of opportunities to go along this stock. So stay tuned for more ideas and hope you enjoy the video. See you soon.